Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Thursday, September 15th. We got a lot of data to go over today, and we're going to jump right into it. We got weekly jobless claims. So we had 259,000 people apply for unemployment last week. The forecast is supposed to go up to 265,000, and they came in at 260,000. So kind of in line where we've been seeing in the 260-ish range, which is still decent. These are actually good numbers. The disappointing part is that sometimes these numbers get diluted, or at least can be a little deceptive when you see a lot of people not actually in the people who are eligible to be in the labor market that dropped out of the labor market. So we do got still a proportion of those, which doesn't make the headline news, but you got to be a little cautious of that. Next on the docket is the retail sales. Looking a little disappointing here. So back in July we had only a 0.1% increase, and the forecast was supposed to drop in August to a negative 0.1, and it came in at negative 0.3%. Now, if you take out the big ticket items such as autos, we have back in July negative 0.4%, and forecast was at 0.2%, and again it came in at negative 0.4%. Now we also got the inflation numbers on the wholesale level, which gives us the PPI, or Producer Price Index, for the month of August. So we had negative 0.4% in July, and the forecast was supposed to be at 0.1%, and basically came in at 0. So no change in inflation on the wholesale level there. Philly Fed, this is manufacturing in the Philadelphia region. This is probably the one nice one we've seen. As you can see, we had a 2.0. Anything below 0, of course, is a contraction. Anything above is expansion. So it's just kind of hovering there in the month of August. Forecast is supposed to dip a little bit to 0.8, and actually jumped up to 12.8. So that was a nice little number that we saw here in the Philly Fed here. However, we got manufacturing in New York region called the Empire State Index. So we had contraction in the month of August at negative 4.2. It was supposed to improve a little bit to a negative 0.5, but it only improved to negative 0.2, so it contracted 2. So again, mixed manufacturing numbers we're seeing right there. Industrial production, not so good as well. As we can see, in the month of July, we had a 0.6%, and the forecast was supposed to be a negative 0.2, and actually it went a little bit further beyond that at negative 0.4%. Capacity utilization kind of worsened a little bit. We had 75.9 back in July percent, and it was supposed to be at 75.7, and it actually worsened a little bit further down to 75.5%. And business inventories not looking so strong. So back in June, we had a 0.2% increase in business inventories, and that shrunk to 0, basically at par. Nothing happened in July. So we had a couple of decent ones, obviously, with the Philly Fed, and then weekly jobless claims in line, but the rest, of course, not looking so good, especially on the heels of the Fed meeting next week. This still creates a lot of uncertainty, as a lot of Fed members are still looking pretty hawkish with the comments, with the exception of maybe Evans and Brainerd, more the dovish comments. So now the Fed funds futures rate came in at 15% for next week of a possible rate hike, and for December like 53%. But there's still people out there that wouldn't be surprised if they do tighten up next week with some type of rate hike next week. At least so all eyes will be next week. So don't be surprised over the next week or so that a little bit of volatility, but maybe a sideways pattern of movement until the Fed meets and gives their announcement as to if there will be rate hikes, or if there's any clues as to the next rate hike on there. Stock market's up. A lot of it is tech. Tech is doing real well today. Of course, Apple released their new products, and it's doing really well, and that's kind of taking the charge today. Bond market, we're doing a little bit better, but right now we dipped a little bit. We were up, as you can see, with the stem here a little bit higher. We got this resistance level here that's kind of forcing us down. We started a little bit higher rate at that resistance level, which was 3 basis points higher. Right now we're at 0, but we did poke our head a little bit higher, so it's possible, depending on how hot the stock market gets, we could potentially go up, or maybe we stay in this level here. We want to try to get above that so we can get kind of back to that same level we were previously last week and before, so we can get kind of in that range to get better pricing again, because from here we lost basically 1 point in pricing, over 100 basis points here. All right, folks. So pricing today, it could be, depending on when lenders came out with the pricing yesterday, it could be a little bit better or about the same as what we left off yesterday. All right, folks. Have a great day. Thanks so much for watching, and we'll see you guys tomorrow. Bye-bye.